The biggest topic for global investors in February was the ongoing outbreak of the novel coronavirus known as COVID-19. As new waves of COVID-19 cases emerged in South Korea, Italy, and Iran, investors grew concerned about the economic impact of a potential pandemic and shifted to a risk-off appetite. The S&P 500 declined 13% and into correction territory, while the 10-year Treasury yield fell to a record low of 1.12 at month end. We've seen that quarantine measures can have a big effect on economic activity. In China, where tight travel and commerce restrictions have been put into place, manufacturing and services purchasing manager indices slumped to all-time lows. We look at both of these PMIs in our chart of the month. As you can see, these readings of economic activity and sentiment fell dramatically in February. Beyond this, restaurant and movie theater activity in China is down nearly 90% from the year-ago period. Manufacturing activity should rebound and make up for lost production, but it will be more difficult for the services industry to cover from a lack of activity. Individual country responses to outbreaks will likely differ, but economists expect that the global impact from COVID-19 will be meaningful. Already in the early days of March, we've seen emergency responses from the U.S. Federal Reserve, the International Monetary Fund, and the World Bank. This particular situation is fluid and changing almost daily, and we'll continue to monitor it closely. But it serves to remind us that Wespath adheres to a long-term, consistent, and disciplined investment strategy. We'll continue to follow this strategy in both up markets and down markets, and it has successfully stood the test of time. For more information about recent market activity and our fund performance, please check out our monthly investment report, which is now live.